Property is the biggest financial asset many of us will ever own, so protecting that investment makes sense. Experts often tell us on the show homeowners should have emergency funds to cover repayments for several months if they needed it. But there are also insurance products that can cover your loan if you get sick or lose your job. Well, to tell us more about home loan protection insurance, we're joined by Huy Truong, CEO of ALI Group. Thank you so much for coming on the program. Just firstly, because I think people must sometimes get confused by the different terms.
Yeah.
That's right. There's lender's mortgage insurance, there's home and contents.
Sure.
What is home loan insurance? What does it actually cover you for, home loan protection insurance?
Sure. So home loan insurance or mortgage insurance is largely around protecting the borrower, not so much the lender. Our policyholders typically will take it out because they're concerned about unemployment or losing their job, a major illness of some description, or if the worst thing can happen is some form of mortality or terminal illness. And so they're worried about protecting them, not so much the lender. Whereas with lender's mortgage insurance is the policy you need to put in place if you don't have 20% deposit on a home loan, and that's something the banks
make you do.
You do?
Yeah, so you think you're covered.
That's right, and you pay the premium, which often is over $10,000, and but unfortunately, if something happens, that policy covers the lender, not you, the borrower.
Yeah.
So what we've tried to do is come up with a solution that really protects the borrower.
It's just, I'm amazed that I never thought of this. I thought that I had health insurance, and many people have got the key man insurance, unemployment, but this is just a completely different product. Does it cover you for anything more bizarre? For instance, well, I shouldn't say bizarre, but if the mortgage rates go up, if the interest rates go up, does it cover you for something?
Not so much if interest rates go up. It's really more about your
loss of income.
So I guess how it came about really is that when you talk to mortgage holders, and particularly as property prices have been going up, the buffer or the savings that people have are reducing all the time. You overlay that with employment uncertainty, and as we know, with Hazelwood in Victoria or the car manufacturing industry, there has been a lot of redundancy. I think in one particular year recently was 400,000 redundancies. So that weighs on mortgage holders' minds.
Sure.
I mean, we know a lot of the banks and the non-bank lenders as well offer products like this, home loan protection insurance. How is ALI Group's policy different?
Yeah, thanks, Bridie. It's a really good question. I guess there's two things we do differently. We primarily sell our product through mortgage brokers, whereas the banks primarily sell it through their own branch lenders. Yeah. Our mortgage brokers now write over 50% of all home loans in Australia. And yet so any customer that goes to see a mortgage broker historically would not have been offered loan protection via a bank. So we saw that was a major gap in the market, and so we started to develop a product and work directly with brokers. We now have over 4,000 mortgage brokers that offer our product to their clients. And the great thing that we see is that brokers who do this really well really round out the service that they provide. So it's not, I'm here to arrange a great home loan for you, but given how, I know how big the deposit's been and how difficult it is to make sure you service it, I can now protect you for it as well. And clients will often walk away feeling, really welcomed to be informed by that this exists.
But although obviously unemployment is a concern, illness is also the numbers of cancers, etc., that go on, and other terrible things that happen that you never see coming down the road. This is an ideal situation for that too. But at the same time, how much would it cost you if you're facing? You obviously got to get it in advance of being sick. Do you have health checks? Do you have to pass a physical? Or?
Again, one of the things we've tried to do is to apply a rule to all mortgage borrowers. So rather than discriminate on the basis of their health history, we really look at, okay, if you're a home buyer and you're looking to enter a 30-year financing arrangement, then you're generally in reasonably good health. So we apply the best rates, therefore, to that segment of the market. So a typical 30-year-old, for example, who borrows $300,000 to buy a first home, the premium there might be around $30, $35 a month. So when you compare that to car insurance, which would be 3 times that rate, it's...
For an asset that's worth
hundreds of thousands of dollars.
Are there exclusions, though, say if you've had a cancer diagnosis previously before you take it out, or heart troubles or anything like that? Are there
Yeah, that's a really good question. There is. So we have this condition called pre-existing exclusion.
Doesn't everybody?
Yeah, and it's one of those things where, and most people, if they know they've had cancer or have had a heart attack, it's very clear on their medical records, and they would have, obviously seen specialists. So, so if someone previously had a heart condition, that's the one condition we won't cover for. But everything else, whether it's cancer, stroke, accident, what have you, will cover for everything else. And it's important that policyholders know exactly how that works. So every new policyholder that we write, we have a team of specialists that call them, contact them, take them through the policy schedule so that they fully understand what they're covered for and what they're not covered for. And that's, again, that goes to the quality of, the service we try and provide.
You've, looking at this, I mean, what would you say to someone though who say, well, I've got life insurance and trauma insurance, income protection insurance, do I need this as well?
Again, really good question. So what we find is that most people now in Australia who have superannuation will have a level of death insurance or life insurance in their super, but they don't have trauma. And medical technology and awareness about major illnesses now, that means that most people are checking, are scanning and getting diagnosed much earlier, which means that the recovery rates are much higher, which is terrific. But during that recovery period, you are still taking a number of months off work and typically costing tens, if not hundreds of thousands of dollars in medical treatment to get you through. And so that's what we find, the living benefit or the trauma component of our product is the most valuable one.
And how, so you would pay the lender the monthly repayments?
No, we pay, so
work?
it's a lump sum. Yeah. So if it's a $300,000 home loan, that's what you're insured for. The living benefit is 30%, so $90,000 we would then pay lump sum to the policyholder.
Oh, so you can use it for mortgage payments?
You can use it
or for...
Most people will use it partly for mortgage payments, partly for medical expenses, and also just continue to live lifestyle. And what we particularly find is that there's a third of women who don't have superannuation because they're primary carers and what have you. That segment of the market is particularly exposed.
And especially when there are more single women homeowners.
Correct, and that's what... And that's what we find really appealing to that group.
And you did some research, didn't you, on sort of the level of what worries among mortgage holders, and also, though, I guess how exposed they are. What did you find? I mean, do homeowners have the funds there to cover in case of...
So with all the discussion and I guess, political and consumer discussion around affordability, home loans, house prices and so forth, we wanted to talk to the mortgage holders directly, so we surveyed 1,000 mortgage holders to just understand their mindset, what their worries were, what they were really pleased about, what their concerns were. And the main thing that came back, the first message was that their number one concern was about employment anxiety. So when you think there's 6 million properties in Australia with a mortgage hanging over it, so that's a lot of
scary. It's just scary hearing that number.
Yeah, this is a big number, and so which means there's a lot of people, particularly the new mortgage holders, who are still fairly at high levels of the debt on that home, are feeling exposed. And so when you overlay that with the unemployment concerns, that was their main concern. So therefore, recently we increased the level of unemployment cover in our product just to make sure we could address that. And then the second concern was the major illnesses as well as accidents. So we're continuously talking to mortgage holders and brokers to see what their main concerns are and evolving our solution to make sure we address that.
Hugh, great to talk to you. Thank you so much for taking us through that from CEO
Thank you
of ALI Group. We've got to take a quick break. We've got plenty more coming up in just a moment.